Welcome back to Teshkid FX for another quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the quant chart. And before I start the video, make sure that you give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, quant has continued to hold above a key area of support at around the $133.2 mark, and it's still holding above the 20-day MA. And before I get into that part of the technical analysis, allow me to start the video here on the 4-hour chart by first giving you a recap of what has been happening, where you can see that quant, after making it to an all-time high, we started the bear market where we had been seeing lower prices in this ABC corrective structure, which took us back to around the $40.1 mark. And after seeing the bear market low, we started a very nice bounce to the upside in a move that has been obeying the Elliot structures, where you can see that I have this Elliot structure in blue, having the wave 5 making its peak at around the $229 mark, and also completed the formation of that higher Elliott wave count 1 to the upside. And after seeing the formation of a higher Elliott wave count 1, whatever we expect next is a retracement to the lower side in the formation of a higher Elliott wave count 2. And we have seen that ABC corrective structure, which we also expect in the formation of a higher Elliott wave count 2 because of its corrective structure. And here on the charts, you can also see this red target area that I had sketched out as the minimum retracement area to the lower side in the formation of this wave 2, and it is within this red target area that I was expecting to see the low for that second wave, after seeing that ABC corrective structure where we saw the low at around the $94.4 mark. And after seeing the low for that second wave, whatever we expect next is a bounce to the upside in the formation of these higher Elliott wave count 3, and by first sketching out a minimum target area to the upside in the formation of that wave 3 by connecting the Fibonacci's, the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, which perfectly lies at around the $396.5 mark, and that is the minimum that I'm expecting that higher Elliott wave count 3 to the upside to do here on the quant chart. And in the formation of that wave 3, which is an impulsive wave, you also expect to see fractal waves in formation within that higher Elliott wave count 3. And here on the charts, you can see that I have this Elliott wave structure in red, where I'm terming this as the first wave to the upside, then a wave 2, and I believe in the formation of that wave 3 before we see a wave 4, then continue pushing even higher in the formation of that wave 5 to the upside to complete a higher Elliott wave count 1, which is a fractal wave within the formation of that higher Elliott wave count 3 to the upside. And getting a little bit into the details of the formation of this wave 3, which I believe is what is playing out, and by first start by sketching out a minimum target area to the upside in the formation of this wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, and that gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, which perfectly lies at around the $164.1 mark, and that is the minimum that I'm expecting quant to do in the formation of this wave 3. And given the support of the area at around the $133.2 mark and also the 20-day MA, there are chances that quant might continue pushing even higher and also manage to break above a key area of resistance at around the $147.9 mark. And once that happens, then we can expect a retest before we continue pushing even higher. And here on the chart, you can see that today we have tried to battle out that key area of resistance at around the $147.9 mark, and this is the second time that we are trying to battle that key area of resistance. And due to that rejection that we are seeing at the moment, this has resulted to the formation of a double top, which is in formation right here, using that key area of resistance as the upper side, that is the tops. And if I draw the chart pattern, we can have these as the first top to the upper side, then we have seen the formation of the neckline, and the second top is in formation. And in case quant continues to see lower prices, maybe lose the 20-day MA, get back to the key area of support at around the $133.2 mark, then that could be the start of a breakout to the lower side out of this chart pattern that I have right here, which is a double top, and giving you a minimum target area to the lower side. Once you see the breakout, that target area can be given by the height between the tops and the neckline. So getting that height between the tops and the neckline, then placing it below the neckline, that gives me a minimum target area back to around the $108.2 mark. So we need to continue watching those key areas of support, the 20-day MA, and also continue watching the key area of support at around the $133.2 mark, because in case we lose the key area of support at around the $133.2 mark, then there are chances of seeing a breakout out of this chart pattern, and that would give us a minimum target area back to around the $108 mark. But in case we see a recovery manage to break above the key area of resistance at around the $147.9 mark and continue pushing higher, then there are chances of fully maximizing the formation of that wave 3 before we see a retracement in the formation of that wave 4, then continue pushing even higher in the formation of that wave 5 to the upside. So that is what I'm expecting on the short term scenarios, and also taking a look at the indicators to see what movements will be supported. On the RSI, we are trading at around the 56 mark, meaning we have massive room for us to support any movements to the upper side in the formation of that wave 3, and the breakout to the lower side out of the double top will still be supported here on the RSI. Also taking a look at the MACD. On the MACD, we have been able to print a bullish cross, but we are seeing a bit of a decrease in the selling, in the buying momentum, and that would mean maybe soon we might be able to print that bearish cross. So let's be patient and see how that plays out, and I'll keep you updated.